Well, resilient volumes, solid pricing, and the raw material cycle that's turned. At least it's turned earlier. I mean, raw material prices started going down in the second half of last year, but it's made its way into our numbers now with the lag that you have because of the long inventory lead times. So things are looking promising for the second half of the year.
If ever there is a sweet spot, it's a company that can raise prices and raw material prices come off at the same time, fattening the margins, and that appears to be the case with you at the moment. How long do you think that's going to last? Because they call it a sweet spot for a moment. It doesn't last forever.
No, it doesn't, but you have to keep in mind that in the last 3 years in paints and coatings, margins actually contracted because pricing barely kept up with raw material inflation, and therefore margins as a percentage went down. We are in a short window where pricing is continuing to go slightly up, and raw material prices are starting to come down. But there's a moment where we will have to adjust, if only because we have contractual clauses in some of our businesses that are linked to raw material prices.
A couple of bits of the balance sheet which appear separate, but I think I'm very interested in tying them together. One is the fact that year on year, your free cash flow has gone from a negative 278 to a positive 137 million as well. But I think that's very interesting, given the comments you're making today about your debt load as well, and really wanting to get down the leverage ratio to less than 3.4 times net debt to EBITDA to around 2 times post 2023. You're using your cash flow to pay down the debt. Is that because the cost of rolling over the debt at the moment has just gone through the roof compared to what it was previously?
Yeah, well, it has, but it's really more because Akzo historically has leverage ratios of between 1 and 2 times net debt to EBITDA, and we made 2 mid-size acquisitions in the last 2 years, and then we had a significant ballooning of our working capital. Supply chains were tight. Raw material prices were high. There was scarcity in terms of raw materials. So like a lot of companies, we hoarded to a certain extent. And now we've got the hangover after the party, which is that our days of inventories went from a historical 90 days to something like 115. We're down to 100 days now, and we're continuing to contract our working capital, and therefore we're generating cash.
Gregoire, good morning. Thank you for joining this conversation. Your 2 main markets are North America and China, and you made a complementary decorative paints business acquisition in China, which you believed would strengthen your number 2 position in the retail market, which is important, and it's a profitable market for you. What are your ambitions in China right now, given the underlying challenges that the economy is facing on growth, consumption, demand, etc.?
Yeah, this acquisition that we made in China is going to close actually 1st of August. All the CPs are lifted, so we're good to go. We're excited about the business. It's about segmentation. It's about having a wider coverage and distribution in China. As you said, we have a number 2 position in the retail sector, and that strengthens that position. The Chinese market is a bit complicated right now. It's better than what we anticipated at the beginning of the year, but it's not as good as what people thought when the Chinese market reopened in March after essentially the floodgates were open and people were allowed to travel. So the market lacks direction to a certain extent. As you said earlier in your show, consumer confidence is not very high, and that impacts people's decision in terms of renovating their home or decorating their home. So the market is okay, but the measures that the Chinese government is taking in order to drive the economy are probably having more impact on exports than the domestic consumption, because it's hard to stimulate domestic consumption.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.